Ladies and gentlemen, good day and welcome to Rushil Decor Ltd. Q1 FY'25 earnings conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectation of the company has on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual result may differ from such expectation, projection, etc. Whether expressed or implied, participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Batela from Asian Market Securities Limited. Thank you and over to you, sir.
Thank you, Steve. A very warm afternoon and welcome all to the Rushil Decor's 1Q FY'25 earnings conference call hosted by Asian Market Securities. From the management side, we have Mr. Rushil Decor, Executive Director, Keyur Gajjar, CEO, and Hiren Padhya, CFO. I now hand the call to Rushil Bhai for his opening comments, post which we can open the floor for Q&A. Thank you and over to you.
Good afternoon, ladies and gentlemen. Welcome to Rushil Decor Ltd earnings conference call for the first quarter ended 30th June 2024. I would like to extend my gratitude to Asian Market Securities for organizing this call and to all participants for joining us today. I am joined by Mr. Keyur Gajjar, Chief Executive Officer, and Mr. Hiren Padhya, Chief Financial Officer. We have shared and uploaded the investors' presentation on the exchange, and we hope you have reviewed the material. Let me begin with an overview of our performance in the first quarter of financial year 25, starting with the MDF board segment. We recorded a total volume of 74,079 cubic meters, reflecting a 25% increase year-over-year, while there was a minor 1.2 decline quarter-over-quarter. Our export volume performed exceptionally well, showing a 26.1% increase year-over-year and a 13.7% rise quarter-over-quarter. The positive performance in the export has been a key factor in our overall financial success in this quarter. The value-added MDF products also performed strongly, contributing 45% of the total volume and 55% to the revenue. Further enhancing our growth, our improved realization in the MDF board, particularly in the export market, have positively impacted our financial outcome. This improvement is partly due to the successful completion of our export obligation and the rising demand for Indian wood panel products driven by the high freight charges on import. This factor have collectively contributed to the better pricing and revenue in our export segment. Turning to the laminate segment, we achieved a total volume of 7,64,682 sheets, which represents a 25.7% increase year-over-year, although there was a 3.1% decline quarter-over-quarter. The export volume grew by 35.8% year-over-year and 4.5% quarter-over-quarter, mitigating the impact of the domestic market slowdown. Domestic volume, however, experienced a decline of 13.8% quarter-over-quarter. Blended realization in this segment decreased by 9.8% year-over-year, with exports seeing relatively stable pricing compared to the domestic market. Regarding our laminate division, the expansion is progressing as planned. We have received the board approval for the preferential funding amounting rupees 122.66 crores through the issuance of convertible warrants. To date, we have secured 40% of this funding, with 75% of the total allocated to developing the new facility for jumbo-sized laminate sheets. The new facility is set to commence the operation by the third quarter of the financial year 2025. Will significantly enhance our production capacity and enable us to meet growing market demand both domestically and internationally. The expansion is expected to add approximately 2.8 million sheets annually and strengthening our market position. In addition to the expansion, we are implementing a stock split at 10:1 ratio. This decision aims to enhance the liquidity and encourage wider participation from the retail investors, making our stock more accessible and attractive. In conclusion, our strategic initiatives is expanding production capacity, improving operational efficiency, and focusing on a sustainable growth are positioning Rushil Decor for continued success. We remain committed to leveraging the industry trends and opportunities to drive the value creation. Thank you for your attention, and I will now hand over the call to our CFO, Mr. Hiren Padhya, who will provide you the further details on our financial performance.
Good afternoon, everybody. Thank you, Mr. Rushil. I am pleased to present an overview of our company's performance for the first quarter of FY'25. Despite facing certain challenges, our team has been committed to maintaining operational efficiency and exploring avenues for growth. For the quarter, our revenue from operations amounted to INR 223.5 crore, reflecting 15.9% year-on-year increase, albeit a slight decline of 4.3% quarter-on-quarter. EBITDA for the quarter 1 FY'25 was recorded at INR 25.57 crore, that is 11.4%. Our profit before tax was INR 16.49 crore with a marginal growth of 0.43% year-on-year and 3.9% quarter-on-quarter. The PBT margin was 7.4%. And the profit after tax amounted to INR 12.31 crore, marking a 0.91% year-on-year increase and significant 36.8% rise quarter-on-quarter. The PAT margin stood at 5.5%. In our MDF segment, total revenue reached INR 169.2 crore, reflecting year-on-year increase of 15.3% and a slight quarter-on-quarter decline of 4.1%. Revenue from the Indian market contributed INR 130.69 crore, that is a growth of 10.9% year-on-year, but declining by 9% quarter-on-quarter. Export revenue reached INR 38.49 crore, that is showing strong growth of 33.1% year-on-year and 17.1% quarter-on-quarter. MDF EBITDA stood at INR 21 crore with an EBITDA margin of 12.4%. In the laminate segment, total revenue stood at INR 47.1 crore, that is an increase of 13.5% year-on-year, but decreasing by 5.7% quarter-on-quarter. Revenue from the Indian market was INR 14.31 billion, that is a showing of decline of 6.1% year-on-year and almost 20% quarter-on-quarter, while export revenue was strong at INR 32.83 crore, which is up 25% year-on-year and 2.1% quarter-on-quarter. EBITDA for laminate was INR 4.3 crore with an EBITDA margin of 9.1%. We also made a significant stride in our capital management strategy. The company raised INR 122.66 crore through preference allotment warrants. We have already received INR 48.76 crore, of which 32.78 crore has been utilized for the jumbo size laminate project, INR 1.28 crore for MDF operational capex, and INR 3.32 crore for general corporate purpose. The remaining INR 11.38 crore is currently held in bank account or in FD. Additionally, we have strengthened our financial position by further deleveraging with our net debt to equity ratio now at 0.45x. This improvement reflects our ongoing commitment to enhancing financial stability and optimizing our capital structure. In summary, while we encountered challenges this quarter, we have demonstrated resilience in maintaining our financial metrics. We remain focused on optimizing our operations and leveraging growth opportunities in the market. We appreciate the continued support of our stakeholders as well as work towards sustainable growth and profitability. That concludes my remarks. I would now like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parth Bhavasar from Investec. Please go ahead.
Sir, hi, sir. Thank you for the opportunity. I have a few questions. So the first thing, sir, how's the demand sentiment like for both laminates and MDF segment in the domestic market, and how do you see it going ahead in the rest of the year? For the rest of the year, what do you focus for the industry, and what do you focus for yourself?
So, hi Parth. We believe that now the festive season started, so laminate demand will move on from now, and it looks pretty good in coming days. And as long as MDF market is concerned, yes, it's also going good. Last quarter, because in Q4, people, they have to finish their financial target for 2023-24. So Q1 was a bit slow, but now onwards it will be again on track.
Okay. So, sir, what sort of growth are we expecting in the laminates business in terms of volumes, and the same for MDF as well?
From 89%, we have achieved 91% capacity in this financial year. I mean, in this quarter only. If you see our production capacity in Q4, it was 89%. This quarter, it's almost 91%. And this financial year, we are targeting 95%.
This is for MDF, you're saying?
MDF. And just want to update one more thing. In Q4, our Chikmagalur plant was running at 107% in Q4.
Okay.
And in Q1, we did it 113%.
Okay, so you can take it up to like 113, 115 as well.
Yeah, we are doing it so far.
Any problem of... Okay. And the target is like for the full year, we'll operate at 95% utilization.
That's our target.
45. Okay. And sir, for laminate?
Yes, for laminate, we are also targeting, because we are also waiting for the new capacity addition as well as from existing capacity. We believe that certain domestic market, there will be certain demand which will increase. And in export market, you can see we are growing like, very good, at very good pace.
Fast pace, yeah.
Yeah.
Okay. So end of the year, like utilization levels would be including the new plant on an average?
If I talk about existing capacity, we are almost running around 90%, 88-90%. I'm talking about laminates.
Yes.
So, we can go up to 95%, something like that.
It more or less also depends on the product mix we are selling across the month. Because if we sell the thinner laminates, the capacity utilization goes higher. If we sell the industrial or compact laminates, the volume goes down. So average blended capacity for laminate can be maintained around 88% to 95%.
Right. Okay. And sir, like since we are operating at, we are planning to now operate at 95% utilization in the MDF segment. Like, do we have any plans to expand in the MDF space?
So as of now, still we are under the internal discussions for what next project we should keep up on. So we'll be opening up to that once internally we have been discussed that what we are expanding on.
Okay. Okay. And sir, like in the laminate space, like have we witnessed any slowdown in the European or US markets for us, or is there like a slowdown expected in coming quarters?
As of now, we don't see any kind of a slowness in the market because as long as the business is concerned, this is all gonna be a new area for us. So we have an ample number of space, we have an ample number of distribution points where we can enter. So this is not going to be a constant for us. We are entering with the jumbo size in this market, so the opportunities are bigger for us than our peer competitors.
Right. But sir, like even at with the current capacity, we do export in the laminates.
Yeah, but the export what we do to these countries are like negligible amount of the export is done to these countries which are developed.
Okay. So which top three countries would be which ones at present?
So for us, Far East has always been a strong area. Then comes the Gulf, and then later on the rest of the world we do currently.
Okay. Okay. Got it. Thank you, sir. Those are my questions for now. I can't join back with you.
Thank you. The next question is from the line of Praveen Shea from PL Capital. Please go ahead.
Thank you for taking my question, and congratulations for a good set of numbers. So first question is related to the MDF. As you are operating at a 91% plant utilization, and also your value-added mix reached to 55%. So, and you had mentioned that the mix in the product changes your the utilization level. So considering both the things, is it a peak or you can go beyond 55% in the value added mix and 91% of utilization?
Praveenji, so far, we have an impulse space to grow because we have not achieved our target, and I think we can reach up to 60-65% because right now from AP plant we have quite a good capacity. At present, if I give you an example of pre-laminated MDF sheets, on an average we are doing around 130,000-140,000 sheets. We can go up to 180,000 sheets. So we have a good space to grow.
And also I would like to add here is that our target is to reach 50% in terms of quantity. And so once we plus like current capacity utilization of VAP is 45% in blended, and we are targeting to reach 50%. So that would also add our revenues by another another levels because of having this all new value addition in place.
And further, I would like to add in terms of capacity, you are saying that we are at 91%. So considering the technology we have, we can go up to 115 or 120% also. Even I will just give you the example. In case of Chikmagalur, we had achieved in one of the months of this quarter, it was 126%. So as K.U.B. mentioned, we have ample scope in terms of both, in terms of capacity and in terms of additional value-added product which we can sell.
And we will not, our preference will be to offer more of a value-added product than the interior grade. So slowly, gradually, we will reduce our interior grade business and we will increase our value-added business.
Okay, very helpful, sir. So basically, pre-laminated or a value-added mix can go up as well as the utilization can go up from here. So the next question, sir, is related to the export. And if I look at your number, you had done very well, whether it's a laminate or a MDF, the export number better. But in the industry scenario is like container availability or a freight rate is on the higher side. The export and import both are impacting. So how you have able to manage, very good number in the export?
So first of all, we had an export obligation which we duly fulfilled by the end of last financial year. So the pressure over the exports or making the export target oriented was not a pressure this time. So we healthily picked up the customers who are able to give us a good realization, and that is a key strategy for now, and we'll be doing same strategy for the upcoming quarters as well.
So, is there any issue related to the container? Like, are you getting it very easily? Because
Yeah, availability is a problem at some point of time, but at some point of time we also get a big volume numbers from the port.
Okay. Okay. Yeah, that's it, sir. Thank you. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Kastav from BMSPL Capital. Please go ahead.
Yeah, hi. Thank you for taking my question. I had one simple question over the price stability of your value-added product in MDF versus raw board. So just wanted to understand, so let's say for every 1,000 rupees fall in pricing of raw board per cubic meter, how much would a value-added product fall? So what I'm trying to understand is how stable is your pricing for value-added product when raw board falls 1,000, 2,000 rupees a cubic meter?
Usually it is between 30 to 50% extra. That's a premium for value added. Suppose you are talking about 1,000 rupees per square meter. In that case, value added will be starting from 1,300, 1,200, and up to 1,500 to 1,600 rupees.
Correct. That is the premium to which the premium it gets. But
motherboard, suppose there is a change in raw board pricings. Usually, value-added pricings are not affected much because that's a very premium segment. So, for example, if there is a 1 or 2% changes in price of interior grade basic board, it doesn't affect all the time to value-added business.
Not 1 or 2. So basically what we've seen raw board over the last few years go all the way up to 27,000-28,000 rupees, come down to 20,000. So my question was more like, if raw board comes down from 25,000 to 20,000, does that affect, how much does that affect your value-added board?
Honestly, we don't see any further reduction in this price base. Whatever the realization going on at present, they are, I think, good realizations. There is a very least chance of going further below.
Okay, sir. Thank you.
Thank you.
Thanks.
The next question is from the line of Rushil Javeri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results. So just wanted to ask, like, in terms of right now, we could see, decent volume growth as, our capacity increases. So what kind of a revenue growth target would we have for FY'25? And once the laminate boards capacity comes on play, what kind of growth would we see in FY'26?
Okay. See, compared to last year, this year we have projected the turnover in terms of the present capacity would be, the first quarter, it is already 225 around. So we will definitely cross 900, that is for sure. Coming to the additional project, both are already, in terms of ply, this is already started. But the numbers what it can be, we may not be able to give the exact number, but 900 plus almost, I think, 50 crore can be added in terms of ply and the additional project of laminates. As mentioned in the earlier speech, the laminate new project will start around third quarter of this financial year. So both together will have at least 50 more crore. So broadly, we can say this financial year we are targeting around 950 crore. And coming to next financial year, over and above what we are achieving this financial year, the normal growth of 10 to 12% will be there in terms of the existing capacity. And for the new projects of ply and this laminate, again we can expect around 250 to 270 crore turnover next year additional. So accordingly, you can consider the figure for 25-26.
Oh, great, sir. That, that's very great to hear, sir. And so with this kind of revenue, just wanted to ask, like, our margins, like last year, I think we were around the, 14%, 15% mark. In Q1, we've gone to 11%. So right now, with, maybe like new capacities coming in, what would be our EBITDA margin? Like, what would, we could see, what is the target for us in terms of EBITDA margin?
See, as you said, 14% was the last year EBITDA margin. We will definitely, achieve around same margin. We can say in terms of MDF, it would be 14 to 15%, and overall margin would be in the range of 14%.
Oh, okay. On the console level, it will be 14%. And so with the ply being, I think value added as well as laminate for export. So FY'26 we can have higher than 14%, right? Because they'll be all more, and plus MDF will also get more value added, correct?
Yeah, see, as I said, in terms of laminate present margin, EBITDA margin is in the range of 9%. Coming to the next, after having the production started in terms of jumbo, the normal margin would be in the range of 13 to 15% for that particular part. So overall, my laminate margin would improve to maybe around 12 to 13%. Coming to MDF, again, on one side, export obligation completed. So the export wise, I think we have got flexibility in terms of taking orders. Secondly, a couple of other continents are also already open in terms of MDF. So, and the ply is also added. So, putting all together, so including the new project, additional capacity utilization, and also the valuated proportion to increase further 5 to 10%, all put together, I think we will definitely improve margin compared to current financial year, so far as 25-26 concerned.
Okay. Fair enough, sir. With this, like, I know you've already answered it that, our capacities can go more than 100%, but we would want some kind of a new expansion in MDF, or how is the market scenario? Like, is there oversupply, or, is there more room for MDF to also grow? So, you would consider, a capex, maybe not this year, but next year for sure, in terms of MDF?
Yes. First and foremost, we need to consider two factors. One is in this MDF market is growing CAGR 15 to 20%. Okay. And second thing, whenever there is one plant coming, they are coming up with some capacity. So it takes some time to absorb that capacity. The good part at present is import is almost 20% of last quarter. I think I was going through data in the month of July, only 2,000 CBM came from Vietnam. So import is drastically down. So there will be space for new player also, and we'll be able to manage our volume. As I said earlier in our call, our major focus is to achieve capacity. That's very important. And that's our focus, and we are very strong about, we are working strongly about it.
Oh, okay. Great, sir. Just like one last question from my side. I think we said that US and Europe, we don't export much. So is it because the realizations are lower? How are the realizations in that market? Like, in case if you want to shift exports towards the Western world, like I'm assuming Vietnam.
No, I think that was in context of laminate exports.
Okay.
And yes, but in Europe and America and Oceanica, they have a different size requirements. So after launching the jumbo laminates, we'll be able to have this new market.
Okay, okay, okay. Fair
We
enough.
are seeing a commodity, so export is possible to that continent as well, but the freight plays a major role. So if we see the current freight scenario, it is very viable for them to take from either mills from Latin America or USA itself.
Okay, okay. Understood, sir. And then just like last one, in terms of industry dynamics, we don't see any kind of risk, right? Like in terms of realizations or, volume demand becoming lower, like any kind of, a macro trend or something you could, just say, okay, is there a risk for, that can act as a speed bump for us?
As mentioned by Keyur, this industry is growing at 20% CAGR. If we see the world analysis today, MDF and particle board plays at 80% of the total capacity installed in other nations, while 20% is taken care by finger joint board and plywood. In India, the scenario is different. Currently, the MDF market share is roughly around 20 to 22%. So we have ample space to grow, and we don't see any threat in the capacity addition or in terms of any new capacity coming.
Oh, okay. Perfect, sir. Thank you so much for answering all the questions. All the best. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Hemant Soni, an individual investor. Please go ahead.
Sir, thank you for providing me the opportunity, and congratulations on a good set of numbers at a difficult time when the peers are reporting subdued numbers. So my first question is how confident are we in reaching 2,500 crore milestone, the target which we had set around a couple of quarters back?
So yes, we have already been planning, and accordingly we are acting, and we are very confident that the target which we have set for ourselves as a company, we are already on the track to achieve it.
And so one more thing I wanted to ask you is how is the rise in freight rate affecting us? Are we into FOB kind of contracts?
No, it depends on country to country and customer to customer. In some cases, we have CIF values as well. In some cases, we have FOB cases as well. So in that scenario, the freight plays a role, but ultimately, every market needs the good at whatever rate possible. So if we just talk about MDF, in Dubai, the freight rate has increased by, I would say, 20%, but the customers are willing to pay because they are in the need of the material.
So, I mean, is it fair to assume that the EBITDA margin would have been much higher had the freight rates not gone up?
I would not say no, it won't be higher because we are already putting to our customers, we are already charging that to our customers. We are not keeping that to ourselves, or we are not booking any kind of profit from transportation.
So basically it's a pass-through kind of thing, right?
Yeah.
Okay, sir. Thank you.
Thank you. The next question is from the line of Parth from Investec. Please go ahead.
Yeah. Hi, sir. So thank you for the opportunity again. Sir, I wanted to understand the timber cost for you in South on kg per kg basis. So how much was it in Q1, and what was it last year, and where do we see it? There's the pressure is coming because of low timber supply. So when do we see this going down?
As such, we don't feel any supply pressure for this subject. It's maybe because of rain there may be some problem, but not big problem.
Our wood prices for this quarter was increased by 1 to 2%, not more.
Okay, sir. In any idea in terms of, can you give us some idea on per kg basis? How much was it?
We can share that you across later.
Okay. Okay, fair enough. Okay, sir. Those were my questions. Thank you.
Thank you. Participants who wish to ask a question may press star and one. Ladies and gentlemen, if you wish to ask a question, you may press star and one. The next question is from the line of Yash from Beyond Capital. Please go ahead.
Hello. Congratulations for the good set of numbers.
Thank you.
Am I audible?
Yes, please go ahead.
So my first question is like, what is the realization currently in the July month for MDF? And have we seen any growth on MOM basis?
I think it's quite stable.
Got it. And like we don't have any ability to export. So are we focusing to increase our volumes in the domestic market, and how we see domestic market demand going forward and mix changing domestic and export?
Yeah, we can see that in coming quarters, domestic demand will be good compared to Q1, I'm sure. And yes, we are focusing equally, and product mix is important part of our strategy. So export is also equally important, and we are focusing on that part. Where I just want to share that we did almost 35% value-added exports in last quarter. So we are also focusing on increasing value-added exports in coming quarters.
Got it. And the margins for the value-added export will be similar to the domestic margins, or how lower we are?
It's very difficult to say, but yeah, the value-added exports margin are much better than the export margin.
Got it. So can we say going forward also the mix will be 75-25 in the volume terms? And
say it again, I didn't get it.
Sorry,
I'll answer the question. See, as of now, I think your question was like how you will strategize in terms of completion of export obligation. So I would put it differently. See, we are now in a better position to take very specific export order rather than just doing export for the sake of export obligation. So now we have got option to take export order considering our pre-decided margins, and we are also going for other continents also. So domestic, definitely we have better margin, but in export also, if you see current quarter, we have improved in both angle. In terms of quantity also we have improved, and in terms of realization also it has improved. So just by completion of export obligation doesn't mean that we will just stop doing export. So now we are in a better position to decide whether to go for export or not, depending upon the exact situation and the margins available.
got it. And one last question, like on domestic side, what would be the mix of value added and majorly what is the mix of pre-lam in domestic sales?
It's very difficult for us to say pre-lam, but I would say we are almost like 45% in terms of quantity and 55% in terms of value. So 55 is our value added to commercial grade ratio.
Got it. Got it. Thanks a lot. Best of luck for the coming quarter. That's all from my side.
Thanks.
Thank you. The next question is from the line of Hemant Soni, an individual investor. Please go ahead.
So thank you for providing me the opportunity. Again, I actually missed the guidance for FY'26, which you gave just a couple of minutes back.
So you need guidance in terms of turnover?
Yeah, sir, in terms of turnover. As well as margin, if you can specify.
I had already said turnover wise, this year we are targeting 900 plus or 950 approximately. Next year would be added turnover of around 250 crore plus 10% normal increase. In terms of margin, whatever margin we are earning this year, that is around 14.
sir, not able to hear you. Your voice is. Hello.
Okay. So turnover.
I was not able to hear you, sir. You became inaudible at some point of time, sir.
Now, okay.
No, sir, your voice is breaking, sir.
Sorry to interrupt, sir. There is lot of air noise coming from your mic, sir.
I guess you are traveling.
Okay. Now I think it seems to be okay. So in terms of turnover, we are saying 950 plus for this financial year. Next year, 25-26, at least 10% increase in the existing turnover plus 250 crore from additional projects. In terms of margins, we are targeting around 14% EBITDA for this financial year and at least better than that in the next financial year.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Rishikesh from Robo Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So my first question is with respect to our domestic realizations for MDF. They are trending down as given in our PPT. So how do we see them trending going ahead, few quarters going ahead?
I think yes, there was minor change in realization around 2 to 3%. But as I say, we don't see much price pressure on wood in coming quarters, so probably we'll be able to maintain this realizations.
Also would like to add here, as mentioned earlier, the imports have also decreased in this quarter. And hello?
Yes, please go ahead.
Yeah. So imports has also been decreased because of the freight component. So it is a good opportunity for us to have an extra port of market over here in terms of gathering more volumes in the number.
So is there any opportunity for us to increase the realization, getting maybe back to what they were before, 1 or 2 years before?
I would say maybe yes.
Okay. And also we have our EBITDA margin that we indicated around 14%, which currently in Q1, which is around 12%. So what would lead to this additional margin gain in coming quarters?
See, as already mentioned, on first is like export obligation completed, so now we'll have better margin in terms of export. And volume-wise also, there's a possibility that we'll get extra volume with extra margin. That is first part. Secondly, capacity utilization, any additional capacity utilization will definitely improve our margin in terms of MDF specifically. And third is like value-added products, which we have been rather improving over the last 3 to 4 quarters. So every quarter we are improving by 3 to 4% in terms of value-added proportion. So as we already mentioned earlier, that value-added product has a better margin. Third, in terms of ply also, I think ply and laminate project, as I said, in terms of laminate project, we compared to current margin of 9 to 10%, the new project will have margins of around 14-15%. So put together, we'll have better margins. That is for sure.
Okay, got it. Thank you very much.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to the management for the closing comments.
Thank you very much, ladies and gentlemen.
On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.